Hello, chart watchers, and welcome to this Thursday, January 25th Market Watchers live show with your hosts, Tom Bowley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Got a lot to go over today, but let's jump in first with a quick market update. You can see the Dow Jones Industrial Average gapped up early this morning, came back down near the flat line, and now is trading near its high of the day. S&P 500, very similar action, with move back up near its high of the day. And the NASDAQ and Russell 2000 rebounding, but not quite as strongly as we see on the other key indices. The 10-year Treasury yield, after moving up close to 2.68% in early trading, has now backed off and is back down to 2.64, down a little bit over 1 basis point. Strength is actually in materials, but you can see here that consumer discretionary taking a little bit of a pause today. At last check, consumer discretionary was the worst performing sector. And the reason, and we'll get into this in just a couple of minutes, but new home sales came in less than expected. And you can see that the home construction index under pressure. Also, you can see the DJUSHD, this is another consumer discretionary area, is down as well, taking a hit really because of some bad news out of Newell, Newell brands. Within the material space, you can see that the commodities area doing pretty well. I think that's chemical commodities. And healthcare also having a pretty nice day, led by medical equipment. And two Dow components reported this morning. 3M and Caterpillar both came in with better than expected results, but they're kind of taking a couple of different paths here. 3M gapped up and has continued moving up all day. And Caterpillar, after gapping up at the open, pulled back very early and is now starting to recover. And if you look at the Dow that pullback very early this morning after the move higher at the open, a lot of that can be attributed to the weakness that we saw in Caterpillar in the first 10 or 15 minutes of trading. But we have seen that reverse back to the upside. And right now we've got the Dow pretty close to all-time highs again. How are you doing this morning? I got to bring my co-host in.
I'm doing well. Yeah, this market, it's really hard to make something of this. It's just a rally, and it just keeps going, and it keeps going. It's the Energizer Bunny.
Yeah, it's, I keep hearing a lot of folks saying, well, it just can't go up any more than this, than what it's been doing. But if you look back at the Dow Jones, and we'll take a look at this in just a couple of minutes, but the Dow Jones has been overbought now since October. I mean, literally it had one little brief period of rest. But if you look at it in terms of the RSI and stochastic and so forth, it's been overbought now for 4 months. That's a long time for an index to be overbought. I don't know. I think it's painting a picture of what maybe we're going to see in terms of our economic strength in the weeks and months ahead. But anyhow, how's your weather out there? Haven't gotten the weather report.
I know. Well, it was a brisk 37 on the patio this morning. And we're going to actually, and I have to laugh. I laughed after I thought the thought, but I looked at it, and the high today is 64. And in the back of my mind, I said, oh my gosh, it's going to be cold today. And then I was thinking about coming onto the show, and I thought, oh, I don't think that would be all that appreciated.
Well, not too far from you. For those sports fans out there and golfers like me, just a little bit further south of you in San Diego at Torrey Pines, the Farmers, I think it's the Farmers tournament, the PGA tournament, and Tiger Woods is back. So he's teeing off today, literally right after our show. I think he tees off about 1:40. So anybody who's a Tiger fan or maybe a non-Tiger fan, depending on how you look at it, going to get some more Tiger news later today. So we'll see how that goes. But anyhow,
drive down there.
What's that?
Maybe we'll drive down there and check the tournament out.
There you go. Well, for those of you who are not familiar, Tiger's won there 8 times in his career. I mean, this is the golf course that he has owned in the past, and everyone says he's healthy, and he seems to feel healthy. So it's going to be really interesting to see how he does this weekend. But anyway, we got a lot on the docket, so I'm going to let you take over with the announcements and agenda and so forth.
All right. Well, as far as our schedule is concerned, Friday, tomorrow, Tom is going to be doing a workshop on trading with the PPO and moving averages. So you'll want to do that. And I'm proud to announce, and interestingly, on my birthday, January 31st, I managed to talk my father, Carl Swenlin, to come on as a guest. He is the creator of Decision Point. So obviously I'm going to enjoy that interview. That'll be fun.
That'll be exciting.
I know. I'm really looking forward to you actually getting a chance to talk to him. So
I'm going to feel like the ham in the sandwich. Got two Swinlands.
all right. So for today, we're going to do our scooter report after our technical news, and we'll follow that up with a technical scanning segment. 10 and 10 to 1 as always. And the first symbol for those taking notes is Intel, INTC. Go ahead and take a look at it. Tom's going to look at it first. And then we'll have anatomy of a trade. And I had some fun going back in time. And I'm looking forward to sharing my trade. Not particularly successful, but just gives you an idea of how to do it. So if you do it my way, of course. And yeah, and with that, I'll pass it to you for some technical news.
All right, sounds good. Yeah, I do want to mention, by the way, that first symbol, Intel, they do report their earnings tonight. So just make sure everyone understands that. They're contemplating a trade there. Let's get into some of the economic reports out. There were a few this morning. First, we had initial jobless claims came in at 233,000. Market was expecting 240,000, so a little bit of good news there. But at 10 a.m., December new home sales came out 625,000. The market was looking for 680,000. So about an 8% miss to the downside there. And then maybe it was partially offset a little bit by the December leading indicators, which rose 0.6%. Market was only expecting 0.5%. I've put in here the 10-year Treasury yield, the TNX, and we can zero in here and see that really, after a little bit of a gap down, we did push higher, move to a new intraday high that we hadn't seen, but for the last 3.5 years, I'd say. But we did pull back off of that earlier high. So probably, the market's just pausing a little bit, especially after looking at that new home sales report. But overall, we're still in an uptrend. I mean, I'm certainly not going to change my opinion at this point. I believe we're going to continue to see rising Treasury yields throughout 2018. I wouldn't be surprised to see this top somewhere in the 3.5% range. That's just a kind of a guess looking at a long-term downtrend. That's where we hit some very considerable yield resistance on the long-term 40-year chart. I mean, I'm talking about going back into the early 1980s when this downtrend in Treasury yields began. There is a trend line that comes in. It's kind of hard when you're going back 40 years to get the exact level of the trend line, but it's somewhere in the 3.5% range. And so it seems to me like that's the course that we're likely to take throughout 2018. And of course, the Fed's been talking about higher rates as well. And the Fed has to sell some treasuries off their balance sheet. So all of that, I think, is going to lead to lower treasury prices and higher yields. But let's take a look at some of these indexes. First, let's take a look at the Dow Jones U.S. Home Construction Index, because this is where we're seeing a lot of weakness in that consumer discretionary space. And you can see the candle. And again, if I zero in here, scroll over, you can see that this move has come from a recent high above 1,000. And literally just in the last couple of days, we have moved now back down to 958. But I want to, put a couple things in context here. I mean, it's really important to understand that, the market moves in cycles. You get moves to the upside, you get pullbacks, and then you get more moves to the upside. And I think this is evident if we pull up a weekly chart on the home construction index. And let's go back to the beginning of this bull market. So I'm going to go back 10 years. And let's take a look. And I know this is going to come up kind of small in your chart. So I'm going to try again, zero in here. This is going to be on the 2012 period. But I want you to see throughout this move, I mean, this was a very strong move to the upside in home construction. Very similar, maybe not as much volatility now as we saw back then, a lot more ups and downs. But in terms of the percentage move, I mean, we've gone from 500 to 1,000 here. Over at the bottom, we went from 150 up to 550. So I would have to say, really, that probably this move back in 2011, 2013 was even more impressive than the one we've seen so far in 2017. But check out, I mean, even though we had these big moves to the upside, notice we had pullbacks, and we held that rising 20-week moving average on the way up on each one of these pullbacks. Really never saw a weekly close below the 20-week moving average for probably about 20, well, maybe not 20, maybe about 16 months or so. And if you look back at what we've been seeing in 2017 and in early 2018, I know this feels bad to see the home construction group pulling back, but a normal 20-week EMA test would be down at the 887 level, which is still another 70 points below where we are right now. So that could be another, 7% or so to the downside just to get to a what I consider to be a normal test in an uptrend. I think the weekly PPO here is very strong. So I would suspect that any pullback is going to hold that rising 20 week. Now, I'm not saying we're going back there. We've managed to avoid testing that rising 20 week for several months now. And really, when you look back, we got close a couple of times, but I don't think we ever actually touched that 20-week moving average. So I'm not saying we're going to touch it. I'm just saying that the pullback that we've seen, while it can be a little nerve-wracking at times, we don't want to blow it out of proportion here. This has been a great move. I think this is telling us that the home builders are still looking to do well in the future, but we're starting to get some earnings reports in, and we've had this huge move to the upside. And so a little bit of a pullback here shouldn't be that alarming from a longer term perspective or even intermediate term perspective. Also mentioned that the materials were doing pretty well. And so let's take a look at the XLB. We are actually breaking out again after consolidating for about 7 or 8 trading days. You can see we're actually making a new high now. So the material group, after a really strong open to 2018, it kind of passed the torch on to some other areas of the market over the past week and a half. But this group is now leading again today. And leading the move to the upside is the DJUSCC, which is the Dow Jones U.S. Commodity Chemicals Index. And here was the move to the upside, sideways consolidation, and now we're getting more break to the upside. And there's a number of reasons for this. First, we had Praxair report very solid earnings, PX, and you can see the gap up here, beautiful reversing bullish engulfing candle right on the 20-day, that rising 20-day moving average. And quickly with earnings, we move right back up to a new breakout. So this is certainly one stock in the group that I think looks pretty strong. Olin Corp, OLN, I think is putting in the right side of a cup off of a nice move to open 2018. So I think this is another stock in that space that's putting in a really nice bullish formation. You've got Huntsman Corp, HUN, after sideways consolidating for the past 2 or 3 weeks. Check out the breakout that we're getting on HUN. Another one that's breaking out, APD, which is Air Products and Chemicals. We had that reversing candle off the uptrend, just sideways consolidated, really held that 20-day, and now check out the breakout. And the volume today already about as heavy as any day we've seen this year, and we're not even the halfway point of the day. So we definitely have money coming in to support this breakout on APD. And then final one, Celanese, CE. Check out the breakout after a few months of sideways consolidation. We had the breakout earlier this month, and notice these pullbacks keep holding that rising 20-day moving average. So all in all, I would say that the chemical commodities index continues to do very well, leading the materials. And again, in a bull market, this is typical. We see a lot of this wide participation, a lot of different industry groups, a lot of sectors leading this advance to the upside. They simply just take turns. And at least for today, we're getting a breakout as the XLB takes its turn. Also strong today, healthcare. The XLV, you can see rising to another high. It's been straight up in 2018 after months of sideways consolidation. Yeah, you maybe could argue some sort of an inverse head and shoulder, but no matter what you call it, it's sideways consolidation off of an uptrend and a breakout that's bullish and that continues moving higher. Within the healthcare space, the medical equipment index is the group that's been leading for the most part to the upside. We've seen strength in a lot of areas within the healthcare sector, but this is certainly one of the better, if not the best performing part of the index here in January. Beautiful move to the upside. And I think it was Varian Medical that was having a monster day today. VAR, sideways consolidation. Look at the volume coming in to support this move. That is a huge advance, up over 13% today, leading the index to the upside. So what is struggling today? Well, the XLE is certainly struggling. and it's about where it was maybe 7 or 8 trading sessions ago. So it's really seems to be losing a little bit of momentum to the upside. I also have noticed that the volume in the XLE has been declining a little bit. And as we make these highs, you can see the MACD starting, or excuse me, PPO starting to roll over. So I think the negative divergence could also be playing a role here, which could indicate more sideways consolidation for a bit. I mentioned in the lead in that the, I think it's DJUSHD. Pull this up for you real quick. The Dow Jones US Durables Household Products Index. Look at this move to the downside. Big move down over 4% today. There was a profit warning out of Newell Brands, NWL. You can see this huge move down. This is why I don't like to trade stocks that are in a downtrend, because these are the kinds of warnings you get. It's downtrending for a reason, and today we found out the reason. Maybe the last thing that I'll mention, we'll get into some earnings, DJUSDN. This is the defense index. See how, even though the stock market was continuing to go up since October, and I can show you that Dow chart, you can see that really since September, when the 10-year Treasury yield started rising, we have continued to move up, and up. But if I go back to that defense index, notice we went sideways here for about 2.5, 3 months. So all of a sudden, this is a group that was not really performing well on a relative basis. Well, we've gotten the breakout, and now we're starting to see some really nice strength. Look at the bounce yesterday off of that rising 20-day moving average, and then the continuing move higher today. Got a couple of great earnings reports in this space today. First was Northrop Grumman, NOC. You can see a beautiful breakout here. And the other was RTN, which is Raytheon. And you can see a big breakout in Raytheon, heavy volume to accompany it as well. So with that, I'm going to go into some earnings reports, and I'm going to let Erin take a look at these on her PMO from a PMO perspective. But the first one, Erin, why don't you pull up? Well, if you have an order already established, that's fine.
No, I do not.
Okay, why don't we pull up UNP then? This is Union Pacific.
Okay.
And while you're getting the screen and pulling that up, this is a company that beat this morning on the top line, 5.45 billion. The market was only expecting 5.41 billion, but the bottom line actually fell a little bit short. So they came in at $1.53, and the market was looking for $1.54. So I thought it'd be interesting maybe to see what your take is on this one, Erin, on UNP. I think it's a buy, a sell, a hold.
Well, let's see. The PMO doesn't look too good, I would have to say. Scooters falling off the cliff as well. Not a surprise. I mean, we have this huge gap down. 50-day EMA is holding up. But yeah, this is, I wouldn't be getting in on a PMO that's starting to move this low this fast. And honestly, again, the PMO, yeah, it can be a lagging indicator, but it can also help you. This sell signal came in back in here. I mean, you could have already been out, just even based on the earnings, like you say, Tom, not to hold through earnings, but we also had that warning that there might be a problem.
Yeah, and I mean those, whether it's PMO obviously is calculated differently, but whether it's PMO, PPO, MACD, or whatever, these are momentum oscillators, and so they do give you a little bit of advance warning sometimes when you start to see those roll over. A couple more stocks. Let's pull up Biogen, BIIB. This is one that also beat on the top line. They came up short by 22 cents on their earnings, $5.24 versus $5.46, but they did, I think, raise their guidance going forward. What do you see here?
Well, I mean, they broke out above that overhead resistance, and that's always positive. Look at that. And it had been testing for quite a while, but we did get that burst out of there. The PMO looks good. Notice we're getting bullish confirmation because the PMO tops and the PMO bottoms are all rising with the price. So I would, if I were holding, I'd be really excited. I would certainly keep holding it. I think you could get in here, but for me, it's a little bit... the rally's a little old. I prefer to look for those opportunities where the PMO is more oversold and just turning back up. So this is already on its way out, moving out. So
okay,
that looks good.
All right, and I'm going to give you two more, just a quick and dirty analysis. Two airline stocks, LUV and AAL. LUV, I guess, first, and both of these, by the way, beat top line and bottom line. So I just interested to see what they were doing.
Yeah, and it's been rough here. I was looking at both this one and American Airlines, which we'll look at next. Of course, both airlines and both tanking. And what was my Monday setup pick? SkyWest Airlines. So we can look at that one shortly too. But I think not too bad. Look at this double top though. This was
Mhm.
this was a huge warning all the way around. We had the PMO sell signal, managed to get back up here, but that's what formed that second top. And now we've actually yesterday, if you look here in the thumbnail, we already had activated or executed this double top, and we're seeing the results. And I would look, if you're just going by the pattern itself, we're looking at a $5.5 difference here. And that would, that would bring us down to $57, that 200-day EMA. So no, bad.
Right. And for the last one, that AAL, what do you think there? Quick and dirty.
Yeah, same deal. This time the PMO cell signal hasn't quite had executed, but this is really, yesterday I would have already gotten out just because of the fact you had this beautiful flag formation and it totally busted with that gap down. And we're just continuing. We could see some support here at the 50, but wow, with that PMO cell signal coming in, you could see typically you're looking at some downtime for sure after a PMO cell signal. So
Okay, cool.
yeah, and I'm gonna just show everybody because SkyWest, like I said, I was like, oh no.
Actually, I think it held up pretty well.
It's doing quite well, actually. It's only down a percentage point. 20 is holding, and I'm liking this flag. That support level is still holding despite the troubles going on right now there. So I'm still thinking it looks pretty good, but it might not gel by Monday. We'll have to see.
Okay. Well, I think it is time now to move on to our scooters.
Indeed.
So, what do you got for everybody today?
All right. Well, what I was just going to do, which is I think useful, is to go to our market movers tile and select our scooters. And this way we can see which ones are in the top 10, which are in the low 10. Of course, top up the big movers, which is what I like to pay attention to. So as far as our top up, if we want to get just a really quick view, if you want to look at an individual, just hover over the symbol and you can get a quick look. But I find that the candle glance and RRGs are really helpful. I'm going to switch over to, let's see, I'm already where I need to be. Good. So I'm going to hit candle glance. So we can actually see these top 10 all on one page. And it'll give us an idea of what, are there any opportunities here? We're seeing some big movement here, and those scooters are weighted toward the intermediate term. So if you start seeing some action there for intermediate term traders like myself, you can find some opportunity in here. So I'm just looking right now, and I would look first at PMO setups, right? So no, I wouldn't find that good. This is, quick weeding out process here. Twitter, yeah, I don't like that PMO, so that would leave. Basically, I would look at these and see what possibilities are. And this looks really interesting to me, AstraZeneca. And I think this one might have actually been a request earlier. But this is great. I'm seeing this PMO, the bottoms are rising. The tops are rising with price. Just got that breakout above that overhead resistance area. There's that scooter move, and we can see volume is still looking pretty good here. So these are the places you can find some opportunity. And just looking at what's going on here now, a giant gap up, certainly not necessarily somewhere you're going to look to just get right in. I think this looks somewhat interesting, mainly because my PMO is starting to turn back up. And we can see in the thumbnail, we haven't quite closed that gap, but there's a good chance that that gap will get filled. I'd be watching that 20 and 50-day EMA and see if that 20 can remain above the 50. And that's all I really wanted to show as far as the scooter reports. I think that you had some interesting ways to look at our scooters through the scooter report summary.
Yeah, I want to go through and just kind of show everyone how you can start out, taking a look from the scooter report on the members workbench. So hold on, let me just start there and show everyone how you can get started here. So let's just say, okay, you want to try and start finding stocks maybe within a certain space. You might look, for instance, at, say, the commodity chemicals space that I just talked about. We're getting a breakout. So where might, how might you find some stocks in that area looking at the Scooter report? Well, if you go to the left-hand side there and click on that Scooter report, you can see that the default, we come up with the large cap stocks. I'm just going to switch this to mid cap stocks and take a look. And then if we sort it by industry, actually, I'm going to sort it by Scooter first, and then we'll sort it by industry. I got it going the wrong way there. Okay. And then let's scroll down until we can get to the commodities area and just see what we have here. All right, so here you've got 6 companies that are in the commodity chemical space. So this is the index that I just looked up a little while ago. I had a really good start to 2018, consolidated for maybe about 7 or 8 trading sessions, and then broke out again. Well, here are some of the stocks, some of the mid-cap stocks that are in that space. And you can see that the Scooter rank on these stocks are all pretty good, except for Univar, UNVR, which is at 32. But the others are looking pretty decent. I'm going to go ahead and pull these up. Now, a couple of them I think we already looked at. But let's just take a look at these based on their Scooter rank. And you can see, first off, that we had, on this particular stock, we've had a huge move up. We are testing overhead resistance. So you've got to at least consider that we do have to try to get through some serious price resistance. We had a lot of volume back at the end of October when we got up close to that 32 and a half area and failed and then came back down. But volume's starting to pick back up again as we make this move, and we are staying above that rising 20-day moving average, which also is above that 50-day moving average. So I think overall, this is a pretty nice looking chart. It's just that we may see a pause here at the overhead price resistance. So I'd be looking at this stock as a possibility on any weakness back to that 20-day moving average. Or if you like playing breakouts, now I prefer, if I'm going to play a breakout, for the stock not to be overbought when it first makes the breakout. So that might be a little bit of a challenge. But overall, I mean, there's really nothing that I see here that I don't like about this stock. It's just whether or not the short-term overhead resistance holds it. So that was BAK. And then let's take a look at Huntsman. Now, this is one I pulled up earlier, and you can see it's making a breakout. I'm going to stretch it out to a weekly chart. Let's just see what's going on the weekly chart. And if you look back, and we can go back almost 2 years, this stock is closed below its 20-week moving average twice in almost 2 years. So it has been a straight up move. I think as long as it continues to hold that rising 20-week moving average, it is a pretty solid company to own. So I think Huntsman looks really interesting. And let's go in and take a look at Olin. Again, this is one that we took a look at earlier, OLN. But this one, after sideways consolidating for a while, actually made a breakout. Volume picked up to open the year on that breakout. Came down and went a little bit below the 20-day, slightly below price support, but has turned back up and now got all the way back up. I don't like this candle so far today. And in fact, this is why I like the short-term trade, because when I get up to a resistance level like this, I do not make the assumption it's going through. I normally just take the profit on the trade and move back and either wait for the breakout, or sometimes you can get a stock pull right back to where it was before, near price support or maybe the rising 20-day moving average, and you can always jump back in for a second time. The third one here, or the fourth one here, I'm not sure if this one has enough volume, but let's pull it up and see. Yeah, this one doesn't normally trade much volume. Only has 7,000 shares traded today. So I'd immediately eliminate that. I need liquidity to trade stocks. Celanese, one again that I brought up. Sideways consolidation. I really like this breakout and the fact that it's bouncing. Nice hammer 2 days ago where it went down below the 20-day and came back up and held. I really like that pattern when you pull back. And it came back down again yesterday, did the same thing roughly, not a hammer, but we did test that 20 again, but we held, and now it's starting to turn back up again. And the volume today, by the way, already 525,000 shares, and it is only it's still not even halfway through the day. So it looks like we're going to do 1 million shares, which we haven't done since back in early middle part of December. So nice volume to accompany this move off the 20-day. I think CE looks very interesting. Then we can take a look at this last one, Univar. Now, sometimes these stocks, normally when you're looking at the scooter and you see a 32, you're thinking, okay, it's probably not a very good performer. But sometimes when you get an extended period of consolidation, stocks will pull back, and so you can find some gems sometimes with a low scooter rank. So let's take a look at Univar and just see. This is one that actually I think sideways consolidating in a flag off of this uptrend. It does need to take out the resistance from about 8 or 6 months ago, but let's annotate this. And I always find it very interesting when you sideways consolidate like that after an uptrend. Beautiful move up over about 3 trading days. Stock ran from 29 up to almost 32. And again, notice once it came down, hit that rising 20-day moving average, where to go? Bounced right back up to resistance and failed. Look at that tail on this bearish engulfing candle. We actually had a tail up above that 31.75 level before we reversed and came back down. So I think we're in a very nice bullish situation here, looking on the daily chart and just over the past 6 weeks or so. But let's take a look at the weekly chart and see if that's giving us any more clues. All right, over 3-year period. Yeah, this one I think looks really interesting because we had a beautiful uptrend, and this stock is still sitting below where it was back a year ago. Now, some might say, well, it's underperforming on a relative basis, so I don't want any part of it. But I kind of look at it as an opportunity because it's coming off of a very bullish move to the upside. So you got a clear uptrend in play. And I don't know, you can almost look at maybe that's a little left shoulder ahead, and maybe we're coming up to put in the right side of a neckline up around that 32 and a half area. And these longer term patterns take a long time to play out. So if you eventually get that breakout, this could be an interesting area to take a look at. So that was just going through quickly, looking at the commodity chemicals. I mean, we could do this for, it's going to take a little bit more effort to find it. But if we go in and take a look at like the medical equipment, which I was just talking about.
Mm-hmm.
Let's see, medical equipment.
So again, he got to this by just clicking on that scooter report link from the homepage. And then you just, from there, you basically picked what mid caps and then sorted.
Yeah, and you can sort by, the scooter. You can sort by the change in the scooter. You could sort by volume, but then that's going to mess up your industry grouping. But then what I did is I just looked at individual industry groups that I think look kind of interesting based on how they've been performing. So medical equipment was one area that I was talking about earlier that's leading healthcare today. So here's a quick and dirty way to take a look at maybe some stocks that are under the radar in this industry group. You got the healthcare, medical equipment, but look at some of these scooters. The scooters are down as low again as 32, as high as 98. So first, let's take a look at ABMD. And you see this one looks pretty much like the index. So very overbought, not something I'm really interested in. I want to try and catch it either on a breakout or maybe on a pullback where it's down near price support level, near the moving averages, RSI down in the 40s. That to me is a much better reward to risk entry than chasing these moves to the upside. So I don't like to chase. But let's take a look at a couple of the others. So you've got Bruker, BRKR. I mean, this will bring up a lot of stocks that you probably aren't thinking about as well. There are thousands of stocks out there, and I would not get in the habit of trading only a handful that you're familiar with. I mean, there's a number of different ways to zero in on some of these stocks. I think Bruker is in a very bullish pattern here, actually. And once again, after making a big move to the upside, you're going to see that we went back up, tested the area, but couldn't get through. So right there, to me, that's a sell. So you don't chase with the RSI here, but look after the RSI dip down to 50 or maybe even into the 40s, it becomes a much better reward to risk entry. And again, if you're exiting at price resistance, that's a pretty nice little handy profit over the course of a month. And then the stock pulls right back down again. You've got price support now, back down around 33 and a half. Notice after the gap up too with big volume, If I get a gap up with a black candle, a lot of times I look for more weakness. And check this out. We came all the way back down, essentially to the rising 20-day moving average. Also, you could talk about the bottom there. That's gap support. So we came down literally 5 days after the big move up with heavy volume, where we got up as high as what, $35 or so. We came back down 1 week later and we're at 31 and a half. So I don't know. I guess you get your option. Do you want to buy it at 35 or do you want to buy it at 31 and a half or 32? And hopefully you want to buy it cheaper. From there, it was a beautiful move back up. You can see the volume was strong on this move. And now we're consolidating. PPO continues to trade above the zero line. So you've got bullish momentum still in play. And ultimately, a breakout here is what you're looking for above 36 and a half. And you want to see that with increasing volume. But I do like this move back down off of the 50-day moving average. We had a negative divergence on the PPO. And, well, slight negative divergence, really equal prices. So you normally, technically, you need higher closing prices. So we may not have quite had it here, but you can see that the PPO is much, much lower. And we did pull back, got close to the center line, got close to that 50-day moving average, and have now turned back up again and on some increasing volume. So I think this is one that looks very interesting to me, even though, again, it's not one of those big names that a lot of people are going to recognize. And we can go right down the list. I mean, HRC, Hill-Rom, you can see this one also making a beautiful move, continuing to hold that rising 20-day moving average. If we look back since mid-November, we've only had one close beneath that rising 20-day moving average. So that certainly has been providing great support. And we probably could pull up a weekly chart and see pretty nice action here as well. Beautiful move up. We did go a little bit below that rising 20-week moving average, but we have since taken back off again, broken out, and now you can see that the PPO looks really strong. And just a couple more here before we switch over to technical scans. But let's take a look at Steris here. So we've got a few more of these, but this I thought Steris was in a nice pattern. Yeah, this one to me looks really nice. Look at that false breakout. Again, that's a short-term sell as a trader, in my view. We had a clear resistance at 93. We broke out above it on increasing volume, and we failed to hold it. Came back down off of an uptrend, put in that doji. And now off of this uptrend, it looks to me like we have a nice little cup. Haven't made the breakout. We tested resistance again, but I think anything back down close to that 20-day moving average looks really interesting and bullish.
Yeah, that flag is pretty much textbook.
Yeah, so I think that one looks kind of interesting. But again, I mean, the whole exercise here is just to show you how you can look at, and I get this question all the time, how do you go from an index, an industry group, to individual stocks? How do you know? Well, you can go through the sector summary, click on the individual sector, go to the industry group, click on that, and it'll give you all the stocks. But this is a way to kind of combine looking at the industry group and checking out the scooter, and also doing it by market cap. Some of you might feel more comfortable trading large cap stocks. Some of you might be looking for the major grand slams using the small cap stocks that are much more volatile. It really comes down to your own trading style. But let's take a look at Biorad, BIO. And BIO, this one kind of, well, actually, I like that huge move up. I think this one's sideways consolidating, but I want to look at a longer term weekly chart. Oh, yeah, I like this one much better on the weekly chart. Big breakout here. Look at where we broke out from. Just below that 240 area, we went right back down, tested it. Now we're starting to turn back up. So this one on the long-term chart is bullish. So now when I look at a daily chart, I'm going to feel much better about it because the long-term chart is bullish. So I'm going to be thinking bullish outcomes on the daily chart. Here you can see the top of gap support. Notice we didn't go back down to the bottom of gap support. There's the top of gap support. There's the low that we traded that day after gapping up. And notice when we came back down, it was right in that range that we held, turned right back up to the upside. So again, this was a perfect example. If you had looked at the weekly chart first, I think this is a perfect example of how you can get in on the daily chart on pullbacks, because that pullback right there coincided with that 20-week test and also coincided with the prior highs that were being tested on this pullback. So all of that can lead to a really strong reward to risk trade. Let's see. We'll do one last one before we swing over to technical scans. So let me just do this last one. We'll go down to the bottom one here, Olympus Corp. And well, it doesn't trade much volume, so I'm not going to pay a whole lot of attention. The pattern, though, off of an uptrend, you see the rising lows and the lower highs, so you do have a symmetrical triangle that's forming, but I would ignore it because of the volume. So that's basically it for the scooter reports. Aaron was showing you how you could get in from that, looking at some of the changes and so forth in the top up scooter movers. And then I was giving you a little bit different angle, how you can look from the scooter reports on the member dashboard to go into various industry groups. And, again, go to mid caps. I focused on mid caps today, but you certainly could do the large caps or the small caps or however you want to look at it from your own perspective. And so now we're going to go into technical scans. And Aaron, why don't you take it away?
Yes, I will take over here. And I'm basically going to show you a few things. The first is, excuse me, where our predefined scans are and your scanning workbench. So I have this particular tile on my home screen, and the way you make sure you get that is by going up here to your settings and make sure that you have this box checked. And that way you'll get that scanning tile at the bottom there. So I'm going to go over to that. So you can have your, group of scans that you use, but there's also down here predefined scans. So these are already done for you. And anytime somebody does the work for me, I'm more than happy to jump on. So this is where we can find the various scans, and you can see what they look for. I'm going to use this example of the 50-200 day moving average crossover because for those of you in the chat room, I think a day or two ago, somebody was really insistent on how to set up a 20-50 day moving average crossover. So I'm going to show you how you could do that fairly quickly and easily, which is to find a scan in the predefined scans that's really close to what you want. And then you can just, manipulate it and make it yours. And of course, you do have to be an extra member or above to access and save scans. So another great reason to up your membership from basic if you really want to use the powerful scan engine, which I think is absolutely the best. So here is what we got. I'm not interested because I really want to know 20 and 50 day moving average crossovers. So, and I might not want all exchanges. So I'm going to go over here on the right. And as you can see, it says click here to edit this scan. All right. I want to share my screen a little differently here. Hold on. This way I can get the arrow for you all to see. All right, there we go. So we're going to click here to edit the scan. And here it is. It might seem kind of confusing language. What I like to do is separate the ands by just adding a return, just so I can figure out what the heck is going on here and tell what each line tells me. And that's a great way to start. So this is a little easier to read, I have to say. So right now, all you have is the type equals stock. That's a little bit too large for me. I want to make it a little, let's get it a little bit more selective here. So I'm not going to choose a sector. I think I'm going to choose, let's look at the NASDAQ 100, see if there's anything. So this is where I can add that in. And there you go. It adds it right at the bottom. I like to move this up because the scan engine is reading these in order. And so it'll move a little faster if you give the group right off the bat so that it can look okay. We don't really need type equals stock, but I'm going to leave it there because it's easier. So here's the simple moving average, the 20 greater than 40,000 for volume. So again, you could adjust this to what you would like to do it for. And I want to do EMAs for one thing. I'm not a simple moving average girl. I really like the EMAs. For those of you not quite familiar with the difference, a simple moving average applies the same weight to every piece of data in the calculation. With an exponential moving average, it puts more weight on the near-term values and less weight on the oldest values. And I like that because I want to know really what's going on now and in the closer term. I really do want these to react differently to give me some of the information I like. All right, well, this is the 50 and the 200. Well, I want the 20 and the 50. There we go. And then the same thing here, I need to adjust this. So this is telling me that today that the 20 is above the 50. But if you're looking for a crossover, you want the day before to have the 20 below the 50. So that's what this is telling you. Yesterday's, and I'm going to change it because I want EMAs. And I think this gives you a pretty good idea of how to do this. And I'm going to change this one as well. And I'm going to make this one 50. Not 500, 50. Okay. And I'm going to go ahead and save this just so we can re-access it quickly. So I'm going to say MWR sample, and it'll be 2050 crossovers. Okay. All right. And now I have it in all of my other scans. So I've now created, I've updated one that was already created for me. So I didn't have to come up with the language on my own. And I was able to save it and use it for my own. So check the syntax. Probably a good idea to do that before you save the scan. But if all you're doing is manipulating a few things, you're more than likely going to be okay. And in this case, we were. So let's see if there are any NASDAQ 100 stocks that have just had a 20-50-day EMA crossover. Well, we have two. So I'm going to just go ahead and we'll take a peek. And there you go. There's that 20-50-day EMA crossover. As far as decision point analysis is concerned, we like to see these because that gives us an intermediate term trend model buy signal. The 20-50-day moving average crossovers are the timing signals that I turn into Timer Digest for the S&P 500, for gold, and for bonds. And so that's really what I'm being timed on. I don't just come up with what it is. This is a market timing signal or an attention flag, as I like to call it. Just because you get the PMO buy or you get the 2050, that doesn't necessarily mean you blindly go in and buy it. I think everybody who's watching this show knows that. Or they wouldn't be watching because you want to look at the charts and figure things out. So this gave me that new 20-50-day EMA crossover. For me, I would have been looking back here when the PMO switched direction, but it's just now moving into the positive. So at this point, it's halfway up to closing this gap. So I might look at it just because the gap should be, we're on our way to close that gap. I would suspect that we're going to close it. So I think that has some possibility. Although, like I said, my trading strategy, and I stick to it, and you really have to. I stick to my finding the PMOs that have had reversals in place for 2 to 3 days. That's how I find them. That's what I will invest in. So these scans are interesting, but I like to use my PMO scan to get my actual candidates. So with that, I think everybody's probably interested. Well, let me see that scan. Well, first of all, if you want to get to the article about the scan, the link is at the bottom of every Market Watchers Live blog entry. So if you go into any of the recaps at the very bottom, there are important links to not only my PMO scan, but to the Chart School articles about each of our indicators that you always see us use. So it's an excellent resource for you. So my favorite scan, where is my favorite scan? Right here. And we're going to edit it just to show you. So currently the way I have it set up, and I do tweak it, currently I have it set up to look at the S&P 500 or the 600. So it doesn't necessarily have to be just large caps. I have large and small caps. I want to find a PMO that hasn't actually crossed above its signal line, because I'm looking for momentum. I guess you could maybe call them sleepers. I'm looking for the ones that are just now starting. The PMOs are bottoming. Momentum is shifting to the positive. We don't have the buy signal yet, and that's okay because of the way I review my charts. I don't mind that. I don't necessarily want to wait for that because it does lag slightly, which is why I think the reversals are the best way to go. So that was that. Now we're looking at a PMO. Like I said, I want one that's been rising. So I want it to not have the crossover, and I want it to be rising for 3 days. And so that's how I set up the language here. And then I like to see the 20 above the 50, above the 200. You can adjust these. Like I say, you can take it completely out. I do have, I think in one of my scans, scooter as well. I like to have a scooter above 75, but I did have somebody write to me and say, hey, when I adjusted it lower to like 60, I had some really great candidates, and that's perfect. That's what you want to do, is fix it to be exactly the way you want it. So that is my regular scan. So I'm going to run it just to see what's happening today. Are there any good candidates? So I would have run this, and these would have been my 14 candidates, for example, for Monday setups. These are the ones I want to look at. So I've got those 14. Now what do I do? Well, I need to save it into a chart list, and I'm just going to use my scan dump. This is a great place to go. You just have your regular one that you will replace all of the values in, because if there's anything interesting, you can always save it to a regular chart list, but I love to do it this way. And one of the reasons is I like to go to Candle Glance to then figure it out. And there you go. So with that, I know I'm just running into our 10 and 10. So I'm going to pass that back to you. Here's our technical scanning, though, what I went over. And I showed you those predefined scans and how you can manipulate those. And then I also showed you how to store and retrieve your scans and run them. So with that, I'm going to pass it back to you, Tom. I didn't have a chance to enter all those into a chart list for us to look at as far as the 10 and 10 symbols.
Oh, okay.
So I'm going to just name them off for you as we go along.
Okay. Well, I did take a look at Intel. I know that was the first one. And again, I do want to just stress to everyone, they do report their earnings tonight after the bell. So I guess if you're going to trade this one ahead of its earnings, do so at your own risk. I'm not a big fan of buying before earnings, but that's just my style. I try to manage risk, and I just don't know how you can really manage risk. I guess there's some option strategies and so forth, but I'm not really into trading options. So I would just leave it alone. But looking at it technically, I like the move up. I like the group overall. Intel did have a false breakout back in mid-December and then had a false breakdown just a couple of weeks ago. They may have some pretty big significance in the Wyckoff strategy. I know when we've had these false breakdowns in the past, and we had Bruce on with us, Bruce Fraser, he did say that this can be a spring where you get this move down, you get this breakdown below the prior lows, and then you take off. So perhaps maybe that was a little bit of a breakdown right before a move up and a nice earnings report coming out tonight. We'll have to wait and see. But I think the overall pattern here is still bullish. I like the sideways consolidation, and I expect Intel to go higher.
All right. All right, the second one we have is building materials industry, Summit Materials, SUM.
All right, SUM, love the breakout, love the increasing volume on the breakout. This is a really nice looking chart. I like anytime I can get a stock to go sideways like this for a while, especially when the market is moving higher, and this one's been consolidating and then finally makes the breakout. I'll also just point you down here to the volume that you can see here on this breakout. So the volume all of a sudden accelerates as you come up, and actually that one just barely made the breakout, but yesterday's volume was pretty decent as well on a continuing move. I think the PPO looks great. I'm a fan here of SUM.
All right, the next one I have for you, and this one was kind of interesting. I know you talk about the treasury yield all the time, but this is the 10-year Treasury Bear Fund, DTYS.
All right. Well, of course, it's moving higher because treasuries are selling off. I think that the yield goes higher, so I would expect that this is going to continue to move higher with pullbacks along the way. You can see that the volume is not that great. I have not really followed this, so I'm not quite sure as far as the tracking, whether it does a great job of tracking that 10-year Treasury yield on a percentage basis. I'm not sure, but overall, it certainly looks good. We bottomed in the 10-year Treasury yield back in September, and we continue moving higher. So I'm going to go ahead and annotate here. And I think the last breakout is probably what I'd be watching to the downside. So maybe right around this 19 level. We've continued pushing higher. The PPO looks good. I would expect any pullback to bounce off of this rising 20-day moving average, just like we saw back at the end of December.
All right. Let's see, the next one I have for you is STML. And I had it on the screen.
Yeah, Stemline Therapeutics. I really like this pattern too. It hasn't made the breakout yet, but off of an uptrend, I would certainly expect it to. So for me, I'd be watching the resistance that you can see with the multiple tops coming in right at about 16 bucks. To the downside, there are really two levels. Maybe the recent lows that you can see over the past 2 months, but I think this breakout on heavy volume, notice pullback, we held that and that rising 20-day. So to the downside, I think that you've got really good support between 12.5 and 13.5. Not sure we're going to go back down there again. I would probably honor this resistance until we break through, though. So if I owned it, I wouldn't have problems taking profits up here closer to $16, especially if you see a breakout intraday and you leave that tail up above it and you come back down and close below. That would be a sign for me to take my money and run. But I think the chart here looks good, and I expect eventually we're going to get a breakout.
All right. The next one we have is CONN, and that's Cons Incorporated, retailer.
Yeah, the retail space obviously has been pretty good. We've been trying to get through about 37, 38 on multiple occasions with CONN. I think overall, again, I like the chart. I like the pattern. Where could it go to the downside? I think it's been holding in the near term close to that 34 level. So that's what I would continue to watch. I think we're in this 34, 37 trading range. That's where we've been for about the last 6, 7 weeks. But again, this is another one that I would expect that we're going to ultimately get that breakout over 37. So I would be a fan. I'd be on the bullish side here.
All right. Let's see, the next one is XPR, and that is Xperi Corp. It's semiconductors.
All right, XPR. Or is it XPER?
Oh, XPER. Yes, it is.
I think I looked at this one, not for the show, but I think I was looking at this the other day. It came across one of my scans. Yeah, it did. I love this breakout. So beautiful move up. It had a downtrend in play. So let's annotate this one here. So I'm not sure where that other high is, but clearly we had something going on here where we had a downtrend. Look at the volume coming in to break that to the upside. And now as we pulled back, we basically held, there was a gap. I'm going to draw this line in across here where we had gap down from. See this huge gap down with heavy volume? Came back up, went through it, and then came back down and tested that level. And now this trend line, just going to use the same line here. But if you connect these highs, you're going to see that that volume yesterday took out a very significant short-term downtrend. It really looks almost like a channel that we were in here. Right here. So you can kind of see, that's what I always use to do channels. You can grab this line with the command and left clicker and just drag it, and you get that same slope. So I use that a lot. And when I get that breakout on the heavy volume, I find that to be very bullish. I would look for this rising 20-day moving average to act as really good support here.
All right. Let's see, number 7 for our Canadian friends, TWM.TO, Tidewater Midstream and Infrastructure.
Yeah, I think we're consolidating. I kind of like the action recently on the, it looks like maybe it tried to make this breakout of a wedge. So the first thing is the uptrend. So I'm just going to kind of show. So when I get an uptrend like that, I look for some kind of continuation pattern, especially being in a bull market. So I would be looking for something like If you connect the highs, I don't know. It's kind of almost make your a lot of different ways, I guess you could draw these lines. But there's a move up. You can see almost like a pennant or a flag, piece of pie, wedge, whatever you want to call it. But I really like the move here. I think this clearly took out a lot of resistance. That was at about the 154, 155 area. And now we're back down to 154, kind of retesting that. Volume looks like it's okay. Trades over 1 million shares quite a bit. So it's a small stock, obviously, only trading at $1.50. But I do like the pattern here. I like the sideways consolidation, that move to the upside. Look at all that volume on the move to the upside. And during this period of pulling back, look at the volume start to just drift. So I think that this one looks pretty good. I'd be looking for another move back up to test that 162 level and ultimately break out.
Okay. Next one is in the auto parts industry, SORL, Sorel Auto Parts.
Yeah, I actually had this one until the other day, and I got stopped out. Didn't like the way it was acting. I still like the space longer term, but I just felt like it wasn't going to hold on to the support that I wanted it to hold on to. So you come across here and you can see a lot of these lows where we were holding right at about the 670 level. And then we went down here, and I think it was on Tuesday that I got stopped out of this one. It was a mental stop, not a physical stop, but I just didn't like it closing back beneath all these lows. So I'm on the sidelines, but I would be looking for a couple of areas maybe for a reversal. One would be this is the low after earnings. So this is another example, by the way, of earnings with that big black candle. See how it trades down the next few days. And the other would be the bottom of gap support. So I'm going to take out the support level that I was originally looking at. Let's just get rid of that. And I think this is now the key area of support. So if I got a reversing candle back in here, I'd actually consider getting back in. But I don't like the way it's downtrending right now. So again, I got out, and I would probably just watch and maybe look for a hammer or something like that to print down near key support level.
Okay. See, the next one I have for you is McDonald's, MCD. And based on the PMO, I'm not loving it.
You're not loving it. I get it.
Uh,
Fun. All right, let's see here. Well, we're in a bull market, so I just feel like it's hard. I'm not going to get bearish too much. We did make a breakout. You can see the rising 20-day has been holding, so I would anticipate that that's going to hold. But I think McDonald's may be reporting soon. So again, I'm not going to hold into an earnings report, but I would, in the very near term, be watching this key area just at about the 174.5 level. Today's low is 174.66, it looks like. So I think we're at a key short-term level. Now, I could probably go back and annotate a weekly chart and come up with a completely different level, but I'm talking about from a short-term trading perspective, I'd like to see that breakout hold.
all right. And our final one, it's been requested for a few days, so I definitely had to include it. Johnson & Johnson, J&J.
All right, I thought that was 10, but I'm going to go ahead and do this one.
Oh, it could be, let's see, 1, 2, 3.
I may have sorted them wrong or numbered them wrong.
Yeah. I'm afraid you probably did because it really is the 10th one.
Let's see here.
I'll fix it for you later.
Yeah, it looks like it's holding on to trend line support. I'd like to see this one hold because if you notice, I could have drawn the line here to connect this low. This is the danger of trend lines. When you're only connecting two trend lines, you can just move it around. You can look like you're really brilliant, when in fact it's just not very strong. The trend line is not very strong if it only has a couple of points. But we are reversing here off what would be the third point on this trend line, which starts to make it a lot more important. And I would just say that for now, I'd be looking for J&J to trade in a range from 148 to the upside, 142. There's also a little bit of gap support here at 142 near this trend line. So I would trade it in that range. Be a buyer at the low end of the range and be a seller at the top end.
All right. And that concludes the 10 and 10. And here you go with the symbols. They will be available to you in the Market Watchers Live chart list. You can reach that chart list by going to our blog page for Market Watchers Live. Just click blogs and find the Market Watchers Live blog. And there we are. All right, with that, I'm going to move into a market update for us. I'll be over there. Let's see. All righty, sorry for that delay. All right, so we're just going to go over to our candle glance and see what has been happening to the market while we've been sitting here chatting. And as you can see, we started the day and we were looking at a nice rally. We are starting to see some pullback here on the Dow, and the S&P 500 is pulling back really close to yesterday's close. So we'll have to see if we can remain in positive territory. At this point, the NASDAQ is just barely in positive territory, and we can see Russell 2000 and small caps have now dipped and are in the negative. We've got the Wilshire 5000 also getting close to yesterday's close. Treasury yields are down currently. UUP, another gap and a gap down today, trying to recover some of those losses, but hasn't even been able to test that gap resistance. We can see commodities trading mostly sideways with USO. Oil trading mostly sideways. It's down 2 cents right now, $13.20 for USO. Gold is making a nice rally move. Had a little bit of difficulty this morning, but it has managed to take off on a rally and it's now reached 129.41. So we're higher than yesterday's intraday high. And we can see the VIX is about unchanged, reading at about 1163. And we've got advances slightly leading declines currently. I'll take us very quickly over to our market summary so that we can see what's going on in particular with the industry groups and spiders. So we're going to look at the sector spiders. As you can see, healthcare and utilities near the top. Utilities has been the laggard for most of this week, but we're seeing them now pop up on the top. And energy, which was the strong performer, as well as consumer discretionary, are the laggards today. As far as U.S. industries, chemicals, which we talked a lot about earlier, and drug companies, drugs and paper are leading right now. And as our laggards, airlines, which again, we did notice that as well when we talked about earnings at the top of the program with American Airlines and Southwest Airlines reporting, having difficult days after reporting earnings. We can see as far as international ETFs, Brazil is leading right now, up 2.8%, followed by South Korea. The laggard right now is China, down a little bit more than 0.75%. Sweden is also lagging down 0.38% currently. And let's go quickly look. I'm going to show you our top 10. We looked at scooter movers already. So let's look at our top 10 as far as most active. There we go. S&P 500. So again, very easy to do these. We could see as far as our most active on the S&P 500, GE's up there. Ford, of course, is up there. Newell Brands right now, you can see that gap down, very difficult day right now for Newell Brands. Those are the most active on the S&P 500. And as far as percent up, the best one right now, we're looking at VAR, Varian Medical, up 13.25% currently. And with that, I'm going to finish off our market update. And as you can see, decision point timing signals, we're still all in the green. So for every single one. So all of our trends are up and all of the PMOs are on buy signals in all 3 time frames. And there we go. And with that, I think we're going to go ahead and move into anatomy of a trade. Did you want to kick that one off or did you want me to kick that off?
Go ahead. You got the screen.
All righty. Sounds good to me. And here we are. So I picked Mastech Incorporated and I decided to time travel because I wanted to do this like I did for my Kelly Services Anatomy of Trade blog. So it looks real time. So it's not, I'm not going to go back and say, oh, well, I'd have done this and I'd have done that. I'm going to look at this and this is what I did. It would have entered my radar. Okay. My radar being that technical scan. it would have landed on my radar on June 2nd. And based on what I see here, I would have seen this double bottom and I would have seen the execution of that. And so the expectation is a move that's basically the size of this pattern. So I would have bought at $44 and I would have had a target up here for 48 overhead resistance, and the minimum upside target for this pattern matches up pretty nicely. I would have set my stop at about 42, and mainly because that lines up at the current time with that 50-day EMA. And that's, you know, I hope not to hit that stop, but I'm willing to take that as far as risk and reward is concerned. So my target 48, my stop 42. And so what we'll do is we're going to go forward in time, and I will take you to the next chart. So that was June 2nd. And now we're on June 28th. And what has happened? Obviously, there's some warning that there might be some problems based on the PMO, but I would be looking at these PMO bottoms rising with the price bottoms. That wouldn't bother me. Also looking at a strong scooter. So now there's where I bought it, and it's now traveled and it's formed a new support level. So at that point, I would have moved my stop up a little bit more. I'd have tightened it up just because, again, I want to try and preserve capital, of course, and that would put me about, well, the last one on there is $45. So that's still a $2 difference. So I would have moved my stop up to 43 at this point. And then we continue forward. And here we are. This is still June 28th. Okay, I need to move this to here, I believe. Yes. All right, so a lot of time's passed. This is August 4th. And I had moved my stop here. We had a lot of this trading range movement, but ultimately I was seeing these rising bottoms trend lines hang in there. Yes, the PMO took a dive, but that was due to this very crazy bar. So I went ahead and I actually looked at I think it was a 2-hour chart just to see which would have gotten hit first. My stop at 43, because the low on that day was 41.85, or would my target have been hit and I'd have gotten out? Fortunately for me, based on the trading for that day, it opened at the high at about $49.50 or at $49. So my trigger at 48 for my target would have popped, and I would have gotten out at that point in time. Now, of course, had it traded differently, I would have ended up out on that stop of 43. So it could have been a very interesting day. But I did want to check and do my homework for you to say that, yes, I would have been able to sell at my limit or minimum target at 48. So I'll just say that I sold it at 48, but I think I would have lucked out and been able to catch close to that high of $49. But in any case, that $44 to $48 payoff was pretty nice. So I didn't actually trade this, but I wanted to go through it in real time so that you can understand my thought process as I go along and determine whether I want to move targets or move stops. And the fact that, yeah, I use the PMO to get in, I don't necessarily use it as my trigger to get out, because at that point, I'm really paying attention to moving averages, chart patterns, resistance, and support. This becomes less important. It can tell me and give me some warning that there might be some problems, but I don't trade specifically off of that once I've gotten in. So I think, so I hope that was helpful.
Yeah, I think it is. I mean, anytime you walk through, I think, time like that, I think it's always good to kind of show your style and thought processes as you go through. So I think it was very useful for sure.
Yeah. So there you go. That was my anatomy of a trade. And I'm curious to see a couple of yours.
All right. Well, I'm going to do something a little different today because I do a lot of setups beginning of each week. And some of these I trade, some of them I don't. Sometimes it just depends. It depends on the timing what I have, because I have a couple of accounts, different accounts. One's a little bit more aggressive than others, so it just depends on which account has free cash available to trade. So and I try to have some cash available almost at all times, but I can't buy everything that I like. So unfortunately,
Yeah.
yeah, I wish I had that problem or didn't have that problem, but I do. But I thought what I would do is first just go into the blogs page. So all I did was from the home page, from member dashboard, just clicked on blogs. And so you get to here. And then you can find my blog, just scrolling down here, trading places. And if you notice at the top, there's a Tom's Live chart list. And if you click on that, I update this the beginning of every week. So for instance, this was Alibaba. This was actually the one that I featured, I believe, in my blog article on Monday. I always have one in the blog article on Monday, and then I have the rest of them set up here in this chart list that you can always access. But here was a really nice inverse head and shoulder. We got the breakout, but it was in the right shoulder stage, inverse right shoulder stage earlier in the week. And you can see the volume really coming in to confirm this breakout. So I think Alibaba looks really good here. CLR, Continental Resources. And a lot of times I don't put a whole lot of words and stuff on the charts. Normally I'm just kind of giving you things that I'm pointing out that I'm seeing. So I'm seeing price action going up. The PP, well, in this case, the MACD, I hadn't switched these charts over to the PPO, but you can see that the MACD was rising. So that's just telling me prices are accelerating. The bullish price momentum is accelerating to the upside. So what I look for are 20-day tests on pullbacks when I have that kind of a scenario set up. And so CLR was getting very close to that 20-day, and you can see it's bounced off of that this week. ENPH, I think I even spoke about this one when we did the setups on Monday, and I thought, okay, well, we might get a 20-day test. We actually got the 20-day test. Stock ran from about $1.97 to over 230, I think on Tuesday. So the setups were on Monday. Yeah, I think that was Tuesday where it went up. And you can see the volume picked up. I actually like the stock, but you can see that there is some support potentially all the way back down at 160. And you've got gap support and price support coming in at that level. So, yeah, and I put that red arrow there thinking that, okay, we might be able to get a move back up to the 20, which we did on Tuesday, but we've turned back down again. So, but that was probably a 16 or 17% move from where it was to start the week to that high on Tuesday. So from a trading perspective, even though it's back down to about where it was, it might still be up a few percent, maybe 3 or 4%, but it certainly was up a lot higher. Anyhow, I could go on and go through these stocks, and I'll go through some more with you. SEDG, I actually own this one right now. I do like the test of support. I only bought half a position because I thought we might get down to the second level, down closer to 33. But again, this pullback, it's in the renewable energy space, which I like. That group's been pulling back, so I think it's presenting some opportunities. But this actually came back down twice this week to the top of price support that I was looking at. And so this one has bounced back up. Akamai, this was one from last week. Now, notice I label these. Here in the middle, you'll see the date. So these were all as of the beginning of this week, 01/22. This is the prior week, 01/15. So this would have been the prior Monday. I had Akamai. I was looking at this support here. We did manage to go one day below, but we held that rising 20-day. I also had put that green arrow in to watch the 20-day, and it's been bouncing pretty nicely off of that. MLCO, I think we talked about this one last week. This is the one I was going to pick for Monday setups last week, but this was the gap up we saw on Monday. So I had this one in my blog down close to great trend line support and price support, but it gapped up on Monday at the open. And look at this tail, by the way. See how it tried to make that breakout? I'm going to pull this up and show this on a bigger screen. And let me annotate. So that prior high, if I'm going to buy down near support, my target or what I'm going to be looking for is to get back up here to the resistance level. Now, if I had been watching this, if it gapped up and I saw it intraday up over 30, I probably would have held to see if if we were going to get the breakout. But if you get a pullback, and that's what I was trying to warn against earlier, if you get that move through the prior resistance and you get a reversal and you leave that tail up there, that's a false breakout. A lot of times that is a market maker potentially distributing shares, perhaps for a client. You're getting a breakout. If they've got to sell shares, one way to get shares is to have a false breakout. So, and I don't claim, I've never worked for a market maker. I don't claim to know exactly how they manage this, but my guess is that they probably create the breakout by buying stock. And then you have a lot of other traders and so forth coming in and buying, and they have all the supply because they have a customer that wants to get out. And so you get this false breakout and a return back down to where you were to open the day. So you have that, you leave that tail to the top. And that to me is a pretty significant short-term sell signal. It doesn't mean that the stock is done moving to the upside. I think this is a really nice uptrend, and I like the gambling stocks. But short-term, that can be a problem. After that, we came down. Look where we tested the rising 20-day moving average, and now we're bouncing back off of it. We could go up and break out now. Hard to say, but I would just say that anytime you get a false breakout above a resistance level like that, you want to take your profits. This was another one. Unfortunately, I didn't get in because of that gap up. So I saw it over the weekend. I put it in my setups, but it had already gapped up. And at that point, my reward to risk was starting to get skewed. So I didn't trade it, but beautiful move. If I had seen it on Friday, I could have done it before the close, but I didn't see it then. All right, let's see. Got a few more I can go through here. Lamar, this was my setup from last week. This is the one I ended up going with. And it went through the 20, came back down. I think it's still okay, but I don't like the fact that yesterday we did come back down and close below the 20. You can see there's a lot of indecision on the stock, but it's just kind of hanging here. Nothing, it hasn't violated any kind of a stop for me. A close below about 70.75 would probably do it for me, or maybe 70.5. I wouldn't want to really follow it much more to the downside than that. MTOR, this one looked kind of interesting. Again, this is as of the 15th, so this would have been right in here because I liked this breakout, this trend line. It was starting to show some strength, and I think they just pre-announced solid results yesterday. I remember seeing this one in the headlines in the news, but I don't recall whether it was, I think it was a pre-announcement. But anyway, that one I think looks pretty interesting. Nomad, this was one I also liked heading into last week, but we had a big gap up and a huge move up. But again, check out the support area that it holds. RSI down in the 40s. So again, when you get this big move up and you get a huge, and that one, by the way, that was a black candle that did not pan out. So I always like to point these out because I don't want anyone to think, hey, they can't do anything but go down after a black candle. This one did continue to move up and it held this support level. But you can see the RSI was well into the 70s. And now after the pullback here for about the third or fourth time around 1620, you can see that the RSI dipped down into the 40s. That's always a much better area to consider for entry. OPHT, this one's been all over the place. Continues to be very volatile. But overall, I like it, though. Look at the volume coming in on the gap. Huge move to the upside. Came back down. We're holding this support zone each time we come down. So it is definitely providing opportunities to trade it in the short term. AVAV, I own this one. It is continuing to hold right here at about 52. I actually got out one day, and I think it was on the day I was trying to raise capital, the day that the small caps really took it on the chin. It might have been like last Tuesday or Wednesday. I'm not sure which day it was, but I actually got spooked out of this one. And after I calmed down a little bit, I decided, hey, you know what? It's a pretty nice looking chart. I still like it. And you can see that the RSI has been down in the 40s now for the last few weeks. Part of the problem is some of these stocks that I featured here are small caps. And so if the Russell 2000 isn't moving, it makes it a little bit more difficult for these stocks to move. But as long as they don't violate their support, I'm still okay with them. This one has been a really good stock. Now, what I was pointing out here, and I actually put some words in on this one, but here you can see that the test of the 20 kept failing. So what I indicated was if we could get a break back above the 20-day with increasing volume, that would be bullish and could possibly lead to another move back up here to test these prior highs. And you can see on the move, look at the volume picking up. We got through the 20. We've been holding the 20 on every pullback, and it continues to move higher. I look for this one to get back up into that 890 area. FINL, I don't actually own this one anymore. I did at the time when I put the setup in. But I think this one also took me out. Actually, it wasn't there. I may have actually taken this one off when it was back up close to the prior high. because I just didn't like the way it had been trading. But as long as it holds this area, it's getting closer and closer to a buy, in my opinion, down toward that 12.5 area. And we'll look at one more, TLRD. This is another financial, or excuse me, another retail. FINL is a retail. But this was a retail, and you can see moving up. Here's the move up in the MACD, putting in a new high. And so again, on the pullback, I'm going to look for that 20-day moving average to hold, which it did, and another push to the upside. Unfortunately, I didn't own this one. But with that, I think we're going to go ahead and wrap up the anatomy of a trade. Some pretty good examples, I think, to watch. Again, if you're interested, you can go to my blog. You can follow that on a regular basis. Again, on Mondays is when I put those trade setups in. Normally, I could have anywhere from maybe 4 to 6 or 7 that I try to feature each week, and just some ideas for possible trades if you're interested. And I try to set them up where the reward to risk makes a lot of sense. But anyhow, that is that. And we got just a few minutes left, Aaron. I know there was one question, and I thought I'd let you take this first question, Aaron. And that is, I saw a question in the chat box asking about old shows, old Market Watchers live shows from about a week or two ago, how people can find them. So I thought I'd let you.
Sure. There was a quick question on how to use the weekly PMO in a scan. So let me go ahead and take you over there. All right. So it's just a matter of adding weekly before it. And this is, somebody also mentioned this in the chat box. You can use an X for crossovers. The ones that I showed you, it was before they had that feature when I wrote the scan, so I haven't changed them. But this is an easier way to do it as well. But if you add weekly, that's how you'll get those weekly PMO signals. And conversely, if you add monthly in there, that's how you would work long-term PMO signals.
And I'm assuming that weekly PMO would be somebody who's looking longer term, holding longer term as opposed to a shorter term trade.
Yeah, absolutely. Here, I'll just show you real quickly just on Twitter. So let's see, Market Watchers weekly. Yeah, so these are the weekly crossovers. And then the monthly crossovers would be on, of course, a monthly chart, which I'm not going to pull up just yet. And then let me show everybody, how do you get to our stock charts archives for Market Watchers Live? This is the easiest. Go to the blogs page, go to our Market Watchers Live blog. Highly recommend you sign up to get the emails when these come out. These are the blog archives. This is not what you want. So I'm just going to take you if you go into any of these posts at the very bottom, and they're very handy because they will give you a few charts. For example, we had that back, we had Scott Carney, but at the very bottom, you can find the Facebook page, which has archives of videos. And then there's the YouTube channel for stock charts, my PMO scan, et cetera, et cetera. So all of the important things that you need to know from Market Watchers Live, you can get from every blog article at the very bottom. You're going to be able to find all of these. And I believe if you just go to YouTube as well, you can. There we go. You can just look us up, stock charts. There we go. And away we go. There. So there's our stock charts channel. There's plenty of videos here. But see, there's our yesterday's, the day before. All of these Market Watchers are available for you.
Yeah, I think if you take that stock charts logo, if you click on that one, and then it'll be kind of more organized down below under the videos.
Mm-hmm. There you are.
Yeah, so then you can go back there and you can see them in order. So you can go back and pick out a show and listen to it.
Yeah, see, that's a great one. January 5th, I did a scanning workshop using my Decision Point scan. So you may want to go check that one out. And there are plenty of others in here. There's Bruce Frazier, plenty of them to go through. So.
All right, well, that is it. We got just a little bit of time here. What's your last 15 seconds of final thoughts?
I Actually, it looks like we've got the weekly schedule up here, so I'm going to just go through that real quick.
Okay.
So tomorrow we do have Tom doing his Chart Watchers, Market Watchers live workshop on if we get the next button here. You're doing your workshop on trading using the PPO and the moving averages. Then following that on Wednesday, next Wednesday, Carl Swenlin, happens to be my father, the creator of Decision Point Indicators and the Decision Point website. He is going to be here as well, so I can't wait for that. And I just thought it was funny that it's on my birthday. He was excited to come on, but at the same time, I did throw it out there that, hey, it's my birthday. I really want you on the show. So
Put pressure on, family pressure.
Yep. But as far as the market's concerned, well, I'm still a bull going into the end of the week. So.
Yep. You just can't simply kill this market. I mean, we've seen the S&P sell off the last couple of days, yesterday and earlier today, but we bounced back. And it just seems like there's money out there every time we get a little bit of a pullback. Money from the sidelines comes in. So really difficult to bet against the market, that's for sure. I wouldn't want to be on the short side. And with that, we are going to wrap it up. Again, want to thank everybody for stopping by. Please remember to complete the survey as you exit. We'd love to get the feedback to hear what you think of Market Watchers Live. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. We'll be back here on Friday. Happy trading.